Let's welcome to Charles. Let's welcome to our talks about credit cards. Eliminate debt. Yes, we like to eliminate debt, but the bad debt. Good debt, we like good debt. The concept we left last week is, we remember, we're going to label all our credit cards with the closing date. We're going to go through a fast recap, but it's very important that we know the different dates of the statements. For us, it's very, very important the closing date. So
last week we showed an example with American Express. So if for whatever reason you want to go on the YouTube channel, you could see highlighted what the closing date was when the other ones
are there.
They're all labeled.
Billing cycle.
This looks like me every week.
Billing cycle. No, it's like, guys, I know for some of you it could be repetitive, but sometimes when we talk to people, more for my daughter, when now we're sharing this with a lot of teenagers, and we explain them that the credit card has all these parts, like they're like, what? Okay, but we need to understand them because we don't use them for expenses. We use them for capital for our businesses. So we're running into $50,000 balance, $100,000 balance. When you use credit cards as part of your capital for your company, these separate things that we're going to show you really start meaning a lot. So billing cycle, you should know, is like the time they start billing you from this day to that day. You have 30 days that your credit cards tell you when they bill you.
And thank you so much for saying that this was how you look like every week, because we kind of wanted to show that by asking the question, what is the billing cycle? But when I asked my friends, these teenagers, these college students that Louis mentioned, that's what their face is.
And we have another face.
The other way.
What other very important part, somebody tell me that we mentioned last week, you need to know? Yeah, the billing cycle, what else you need to know about a credit card?
What could this face imply?
Interest rate?
Interest rate is good, but people don't even look at that. I mean, I bet you $100, just anybody, what is the interest rate on your credit cards? They don't know. And for us, we don't know because we don't pay it. We never pay interest. Any other guess?
The amount due?
Amount due is good too. You're too focused on a retail. Closing date. That's the closing date. Who can tell me what is a closing date? We don't have the regular ones that always know. It was raining today. Well, there's people today in the meetings. Closing date. What is the closing date, Mrs. Erianna? Help me.
Is it when basically the date in which the billing, the charges close? Like,
yes, it's the last day of the billing cycle. Is the day they cut your expenses. It's okay. Till here, we charge you for your next stay.
Of that 30-day cycle.
And you will see why it's so important. Then we have another one.
What's this one?
This one, everybody knows it. I mean, I tell you, when you ask them, what is the best thing that credit cards they give you? You have to pay right away when like cash.
The minimum payment date?
Yeah, that's also what the question was. It's like compared to a debit card. Do you get charged right away? Do you pay? Do you lose your cash the same day you use your money?
No.
No. So what they give you? They call it what they call how many days the credit cards they give you to pay a credit card?
30 days.
How many?
30 days, a month.
That's the cycle. And then on top of that, they give you what is called the grace period. which is 20 to 22 days.
Yeah, 20 to 22 days, 25 days the most. That's what you're thinking of 30 is it's only, we never get to 30. It's only 22 to 25. That's the grace period. That should be used to find the money. So at the end of the month, we can pay it. But that's why we're praying, because that's when you find money. That's when you start finding money. And that's why it's so important what we're going to tell you now. Okay, because like Erianna, you want to say that part?
So kind of as to what you said, you do have the 30 days, the billing cycle. That is when you're charging the charges, the amounts, whatever you're spending your money with on the credit card. It closes right there on the closing date. And then on top of those 30 days that you had to pay off those expenses, the credit cards are so nice. They give you so nice. They give you that 20, 25-day grace period. So in total, you don't have those only 30 days. You don't only have a month to pay off the credit card, but in fact, you have 55 days. And I want to stress the importance of 55 days, because what's the benefit of having more time? Again, yes, you can have the time to scramble, but thinking of college students or anyone working on a bi-weekly paycheck, in 30 days, you only have 2. In 55, now we have 3.
So you have the same money, because remember, the people that is new today is like, we always base is with the same money, we can do more. I mean, we're not the regular person who will tell you the only way to pay credit card is easy. Don't spend, make more money, and pay more. No, that's too simple. It's using your money better, much better. So that's a big difference. Now we have, like she was saying, now let's go to week. You have 5 weeks, at least more, 4. I mean, 6 to 7 weeks to pay if you have a weekly salary. So you have more money coming in to pay the same amount of debt. Always we're going towards 0 interest. So saying that, this is what happened. Okay, you start billing yourself on August 13, August 15, and you don't pay till October that money. You start in August 13, finish August
September
37, and then they bill you for October 18. That's a long time, long time. Now we're going to show you how much it means that long time. It means a lot too. This is very important because you're going to be like that after what we just tell you. Like, which way do we go?
I thought it was 30, now you're telling me 55.
I will show you why it's so important. This is the billing cycle. Let's see if you can kind of follow us what we're going to try to do. If I give you this billing cycle and you have to spend money on the credit cards, when should you spend the money? At the beginning of the billing cycle, in the middle, at the end? When should you spend the money? Like, let's say September 1st, so to September 11, or September 20 to September 31st. When do you see that you should spend the money?
Early.
Early is good. That's the whole idea. And that's why we need to label all our credit cards so we don't have to think, okay, today is the 25th, my credit card says 20, great, this is the best credit card to use today because I'm starting my billing cycle. It will take 30 days before they realize I spend this money. I will never charge 0 interest. I have another 25 days. If I pay in full, I pay 0 interest. So the chart goes kind of like this. First 10 days, great to use. Second part, not good. Let's try to use another credit card so we have another 30 days. And at the end, do not touch it. Like, it will be very wrong to use these credit cards on September 30 because you're going to be billed next day.
Yeah, that's what I kind of wanted to touch on, especially for those of us that don't know too much about credit cards yet. Throughout this 30-day period, throughout this 30-day billing cycle, you were to spend it on September 30th. Closing date is right there, September 31st, and you don't get to use up those 55 days to pay the, credit card. You only have the 22. So when we say great to use, we're saying it because you have the more time.
And a lot of things I want to explain you now. That's, I mean, it's to give you an idea that you keep on postponing your payments, from August to October, September to November, December to next year, February. That's what you want to do. You want to postpone your payments. You want to have your money working for you, not for the bank. So you want to keep your money. And this is the why. Okay. For you guys, I mean, whoever was in that on the other charts, this is a real client of us. We show you already his statement. We show you how long it will take to pay those $10,000. It's 20 years. So look at what happened and how it's so important here. Okay, he has these balances. Obviously, this person doesn't have extra money every month, probably maybe 1,000, but he cannot pay the $10,000 that he cannot pay the $10,000 that he owes. So he comes to us and like, how do I pay this better? Using the domino system, we're going to pay always faster. By now is like the $800 credit cards. I mean, he has 1,000. He can cancel one of the payments for full, so he doesn't get charged interest. With this system that we're going to tell you, using the credit cards correctly, we call it you split the statement. You're going to have two statements. You're going to have two billings. So all I did here for you is the 2536. We're going to, on the statement, it's going to say, you owe me 1920, but the balance at the end of the billing cycle is going to be 626. I know you don't understand nothing of what I just said, but that's what I'm telling you. That's why I said the foreclosure. I'm telling, just follow me and believe me, because the best thing here is like, believe me, don't try to figure out why am I wrong and try to do it right. This person didn't have this month $2,500 extra to pay this credit card. But I'm going to show you, using the credit cards correctly, he's going to split in the statement. Now, at the end of the month, he's going to read, for next month, I only owe 626. Why? Because we do this. Last talk, we talk about using the expenses to pay the credit card. Well, with this person, we figure out, okay, next week, what do you need to pay? I need to pay my insurance, my groceries, my T-Mobile, my gas.
Things that they were already paying outside of this credit card, since they were carrying the balance, they didn't want to use the credit card anymore. So we told them, put it in. And
yeah, that's the difference between people say, well, I'm scared of the credit cards. I don't touch it no more. I'm paying everything with my debit card. So I know I only spend the money I have. Great. That doesn't help you. I mean, that only
living in this cycle of fear.
Yes, you keep on paying interest, So
That's what I do.
No. This, what you do is we have a budget that was in class 1. You do the budget of what I can use to pay the beginning of today. I didn't put it today, but it's like your income is equal your expenses plus your minimum payments. Your income equal expenses plus minimum payments. You tell me you have the money to pay the minimum payments and you have the money to pay your expenses. Our system doesn't give you money. Every month you make the money for your groceries, your T-Mobile, and your gas.
Expenses.
Only that you are paying incorrectly. By switching the cards correctly, we're always going to have balance available. So this MasterCard, on the week 1, we put all the money in the credit card. And we're going to use another credit card to pay those expenses. But even if you don't have so many credit cards, you still can use the credit card again because you already pay off that balance. So even if the balance of these credit cards was only 2,000 and you owe 1920, you pay off, and then you use. Because that's the cash you had available to pay off. So still you can use it with only one credit card. of course, we want you to have at least 4 credit cards so you can split per week and you can take advantage of the 55 billing cycles. Then the second week, same thing. Still, the credit card was not due. So I keep on adding my expenses, and look at what happened. At the end of the billing cycle, my balance is 0. Can you see that, or do you want to ask me any questions? Because that's a very big concept, that one of the 5 big concepts because that you need to understand. You put your money in the credit card.
Yeah, I think I have a question on that just to clarify. So, so what you're saying is it, what if it's more? What if like a payment, a card is more than what you have to pay in it? Like it won't be zero balance, right?
No, okay. Remember, we don't do mash. Okay, we're talking about. I mean, at $10,000, the person, if you spend $10,000, you owe $10,000, you need to be making $5,000 a month, and your expenses should be around $5,000.
Right.
So I didn't understand the question though, but
so then because you said the balance goes to 0, but then you still have 5,000 still to pay off, right?
Yes. Okay. Let's do this. Okay. I'm going to show you a real example so you can see it.
Okay.
You can believe me. But remember, all we did here is says don't pay. No, let me show you this. We'll clear something, and then we come back to this screen. Okay. This is an American Express. It just happened. We make it on a simple one so you guys can follow it. The balance is 144. Minimum payment 35. Assuming we're dealing with the real, it could be 10 more. It could be 1,400 and a minimum payment of 35. You don't have more money. You're not paying the 144 because you have a $0. You have $1 left. You told me I don't have extra money more than my minimum payment, so I cannot pay off more. Look at what we do. If you can see the first line here, it says payment 191. So I went ahead and I paid 191, which is the Geico insurance that you see on the third line. So my insurance, this person said, no, pay put the money in the credit card, pay 190. The credit card went down. And you can use it again, like you're saying, if you don't have more, you always have balance because you're paying first and then you can use it again. We're going to use another credit card, but you're using it again. Look at what happened. This is the statement, the real statement online. It says minimum payment due, 0. Real statement balance, 0.
Yeah, the important part is the remaining statement balance is 0.
It went to 0.
How did it go to 0?
Because I owe 144 and I put 190.
Oh, okay.
Okay. But the part that you've been confused, and I know you're following numbers as well, that, okay, but what I still had to pay 190. Yes, you said, that's why it says balance 513. I paid my insurance $190.
Oh, the statement balance, which is this previous statement.
So this one now goes to the next, but this money, I don't have to pay till like in 45 days.
Yes. Okay, I got it.
So imagine when we do this with $10,000, we do this with $50,000. Yeah. You move the money up and down, so you have 0 problems with the state minimum payment. You have zero interest if you can manage to do like this. And we have more other ways that you're going to help you to pay a credit card, but by this, you're helping without putting any extra money. It's
too easy to ask you, like, make more money, do a side hustle, or spend less money. That's too easy. You already have the money for your minimum payments. I mean, you have to be paying the minimum payments. And then the expenses, they're already there.
Yeah, when we don't have here, usually you pay 70% interest So on that $35, I mean, $30 go to interest and $5 go to principal. That should be here. 35 new.
No, this one is so small.
No, because we don't pay interest,
Yeah,
so
this one is so
we will pay it for. But usually 70% is your interest. So it's like on that minimum payment, it's you $30 for interest that you don't throw it away. So, but that's how your balance goes to zero. You don't need money for your minimum payment. And the beauty about this, when you are paying $35 as minimum payment, you were asked to have extra money. You need to have the $35 besides your expenses. When we go to this technique, you don't need those $35. So you're going to apply it all to principal. This lady was paying $52 per month. So if you play this game 3 times, you're out of balance. You're the 144, you play 3 times, your principal disappear, you didn't pay 0 interest. Because you apply 50 one time and 50 another time and 50, the 144 disappear. And you pay 0 interest on a credit card that you have a balance, and when you start the relationship, you told me, I cannot pay the full balance. If this goes to 1,440, it's the same.
You can times it by 10, times it by 100. We use this example because it's kind of easy numbers to visualize.
Here, the original value is 2,500. You're paying 29% interest a year. So on 2,500, on 2,000 is $600 plus half. You're paying $900 of interest. No, sorry, 450. It's 150. $750 of interest per year if you carry on and you don't pay this credit card. Okay? By doing this game, you will save those 750. And that's what I tell you. You play the game 3 times, you almost kill the credit card. That's what I tell you. All you have to do is play. We call it a game because it has to be a game. You have to like it. You have to think, I'm enjoying eliminating debt. I'm enjoying paying my bills. It feels good to pay bills. It feels good to be without bills, but not to pay bills. But we had to pay bills. And that's all you had to do. It's like, put your expenses inside the balance, put it again. Now, this minimum payment that was like $100 on this credit card goes all to principal. You're giving this person 100, she was paying always a bit more. Everybody pays a bit more. Look, $150 she was paying. That goes all towards principal. Here, as you can see, on this credit card, it was $71. It was interest. That money is gone. That money is running away. In a year, that's the $700. You lose $700 by using the credit card, paying the credit card wrong.
You lose it, and those credit cards that give you rewards, or that give the people that know how to use them, the people that don't have the balance on them and are paying interest. Oh, here's free miles, here's free this. That interest here.
No, when you have balance, still you get the 3 months. It's okay to get the 3 months, but you don't lose it in interest. Don't lose it on interest.
No, like that interest you're paying for other people's rewards. Don't do that.
Yes. So, did we follow the technique? Any questions? Anybody's a bit lost, like I show you that yes, you're going to be? Guys, I've been doing this for 15 years. I play with all the credit cards in the company. I know it's a different concept to grabs. But when you get it, it's amazing this. When you get the statement, it says 0 payment due, 0 balance. But I know I owe money, yes, but you owe for the next statement. Relax, make more money and pay it. We cannot eliminate the money. The money, you have to give me the money. But what we're going to eliminate is interest.
Yeah, that's pretty awesome.